In Chapter 6 of Economics in One Lesson, the book discusses the impact of government credit on businesses. The government's encouragement of business is often as dangerous as its hostility. This encouragement usually comes in the form of a direct grant of government credit or a guarantee of private loans. However, this proposal is often complicated, as it involves the possibility of inflation. When discussing government credit, we should assume that the credit is non-inflationary for the sake of simplicity. The most frequent proposal of this sort in Congress is for more credit to farmers. The faith in all these policies, however, springs from two acts of shortsightedness. One is to look at the matter only from the standpoint of the farmers that borrow. The other is to think only of the first half of the transaction. All loans must eventually be repaid, and proposals for an increased volume of credit, therefore, are merely another name for proposals for an increased burden of debt. There are two main types of loans to farmers provided by the government. The first is a loan to enable the farmer to hold his crop off the market, which is harmful, but we'll discuss it later. The second is a loan to provide capital, often to set the farmer up in business by enabling him to buy the farm itself, or a mule or tractor, or all three. The case for this type of loan may seem strong at first glance. However, there is a decisive difference between the loans supplied by private lenders and the loans supplied by a government agency. Each private lender risks his own funds. When people risk their own funds, they are usually careful in their investigations to determine the adequacy of the assets pledged and the business acumen and honesty of the borrower. If the government operated by the same strict standards, there would be no good argument for its entering the field at all. Why do precisely what private agencies already do? But the government almost invariably operates by different standards. The whole argument for its entering the lending business, in fact, is that it will make loans to people who could not get them from private lenders. This is only another way of saying that the government lenders will take risks with other people's money, the taxpayers, that private lenders will not take with their own money. Sometimes, apologists will acknowledge that the percentage of losses will be higher on these government loans than on private loans. But they contend that this will be more than offset by the added production brought into existence by the borrowers who pay back, and even by most of the borrowers who do not pay back. Subscribe Libertarian Facts.